Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
So is this a full-time gig or is this a side gig?
No, this does not pay the bills, sir. I'm not Gary Vee or Joe Rogan, at least not yet. This is a 8 to 10 year plan to maybe get there, but this is I'm in the energy business and also a bit of financial markets.
Okay, cool. All right. Well, I'm yours.
Awesome. All right, let's go. Let's rock and roll. 5, 4, 3.
Oh,
2.
do you mind if I record at my end as well?
No, not at all. Do I need to do something? Okay. Yeah. Approve. Okay. Are you good?
Great. Let's go.
5, 4, 3, 2, 1. Welcome everyone to the Stonks Go Moon podcast. My guest today, Adrian Reid, founder of Enlightened Stock Trading. Welcome to the pod.
So good to be here. Thanks for having me.
Love Australians, my favorite people. Some of my favorite people are from Australia. So every day that I get to chat to you guys is a great day.
Nice. Love it. Thanks so much.
And today we are going to talk about trading, all about trading, the ins and outs, where to start. But I think before we get there, I feel the need to get to know you as a person a bit more and then get into the trading side, because for me, trading is as much as it is the person and the personality of the trader than it is what they actually do. So when did you start trading? At what age? Do you even remember?
Oh, boy. I started in my very early 20s. So I've been going a bit over 25 years as of now.
Oh, okay.
And I started because I was just starting work and realized I didn't want to work forever. And I was in a corporate job and really just looked at the future and looked at the bosses and thought, okay, I really don't want my life to be like that in 30 years' time. So that's what kind of kicked off my I guess, investing journey. Mm-hmm. And investing in stocks very quickly became trading in stocks because I'm not patient enough for buy and hope investing. So we'll get into all of that. But
what did you do out of interest sake? What was the profession at 20?
So when I studied university, I studied chemical engineering. I never worked as a chemical engineer. I went straight into strategy consulting, business consulting. And so I did that. I really liked the work, to be honest. It's analytical, you get to do numbers and modeling and work on other people's businesses. So it was really fun, but just super high stress, long hours, high expectations, and really just not great quality of life. I actually spent, this is not in my very early 20s, but a little way into my journey. I spent 18 months where I flew from Australia to New Zealand every single week.
Wow.
And at the end of that, I was a bit, okay, something's got to give.
This isn't going to fly.
That's the sort of demands that it placed on me, and that's just not what I wanted to do for the rest of my life.
Okay, so how did we get into trading? Did you see an ad? Did you know someone that did it? Did you find a mentor? How did that end up?
It started... Essentially, I mean, I had known about the stock market. I tell a story about how, when I was a kid, I was about 8 years old, and I was at my parents' holiday house, and we discovered this board game that someone had left there called the stock market game. And that game, you basically rolled the dice, went around the board, the market went up and down, you bought and sold shares, you got dividends, there were stock splits, you made billions of dollars. It was amazing, best thing ever. And so that was sort of my first, the stock market, that's cool. But then many years later, I actually started investing. And that really started with a conversation with my father, which went along the lines of, I don't want to work forever. How do I retire early? He laughed at me, of course, because, he's still working. I'm young and don't want to work. But he said, well, okay, if you want to retire early, you've got to learn to invest. You're going to have to get good at it. You've got to put a bunch of energy into it. And so we started talking about the different ways of investing. I didn't have the money for property. I wasn't really interested in running my own business or buying businesses. So stocks was it.
Yeah, so VCs and entrepreneurship, and basically that went out of the window, out of the game. So no.
Well, I was pretty young. I didn't come
Yeah,
from money, a lot of money. I
yeah,
had a
fair
few
enough.
$1,000 to my name at the time. So, stocks was pretty much what I could get into.
Cool.
Yeah. So
And
I started investing in stocks. I did the usual things. I bought companies I knew. I bought companies I thought had good products. I took
okay,
tips. I read research. I did all the stupid things that don't work.
okay.
And after 3 years of basically my account going, sort of sideways and down, I
Yeah.
eventually started, technical trading and systematic trading, which is what I do today, systematic trading. And that's when that's when things took off and I started actually making money consistently.
Okay, so what's the difference between discretionary trading and systematic trading? Because that's a question I get a lot.
Yeah, solid question.
Mm.
Discretionary trading is where you use your discretion to make a
Mm-hmm.
decision. So you take some information from here, some information from there, and you combine it and you use your judgment and you make a decision.
Mm-hmm.
The information could be a range of different things. It could be what's on the stock chart. It could be the news. It could be social media. It could be, tips from analysts and all these sorts of things. And you're supposed to, assemble all of that information and make a logical, rational decision and buy or sell the stock.
Mm-hmm.
The trouble with that is it's subjective because you can have the same information that I've got. We can make completely different decisions because we interpret the information differently. Because it's subjective, it's not consistent. Because you might feel really great and positive about the world one day. So you read all the information and go, yeah, I'm going to buy. But I might not be feeling very positive about the world. I might read the same information and go, holy crap, I'm going to sell.
Yeah, true. Okay.
So that's discretionary.
Yeah.
Right? Systematic is kind of the opposite. It's purely objective. If A and B and C are true, you buy. If D or E is true, you sell. So it's rules-based. And if I have the rules and you have the rules, we get exactly the same answer every time.
How
That way,
long? Yeah. Sorry, continue before.
No, sorry. I was just going to say it's repeatable and
Yeah.
it's testable because you can look at the past and say, okay, how did these rules perform?
So how long did it take for you to develop that system? Because if you were like me, we've all blown accounts at the start, and there is this sort of notion or fallacy that everyone just starts and hey, they're successful, and that's what social. That's what and it's easy and it's successful, and that's what social media shows you, and that's what the algorithm pushes. But how long did it take for you to develop that system where you get to a point, okay, I'm comfortable now?
It took 3 years to get to the point where I realized that my emotions were in the way. I was trading subjectively, and there was no way I was going to succeed because I wasn't consistent.
Yeah.
About 3 years in, I discovered systematic trading, and I discovered systematic trading. I don't know if you can see the books on the wall over there. Basically, because I started to get desperate because I wasn't working. The trading wasn't working.
Yes.
I just really wanted to find the answers. So I just read and read and read. I got dozens of boxes and boxes of books delivered from Amazon and found in Market Wizards, which is
OG Bible.
Yeah, absolutely. And if anyone who's listening and is a trader and hasn't read it, you absolutely should.
You should.
But I read all the interviews in Market Wizards, and I basically took a big text and just crossed out the ones that I didn't like, that I didn't resonate with, that I couldn't do, I didn't want to do, I didn't want my life to look like that. And what was left was end of day systematic trading. And the guys that were and girls that were doing that in the book seem to have the best lifestyle, lowest stress, solid returns, consistency, and confidence. And I thought, okay, well, that appeals to me. I like numbers. I like, analyzing things and putting together rules and following rules and all of that. So that's that's basically my approach from then on.
Yeah.
I developed my first system. And as soon as I implemented my first system, my accounts went from doing that to doing that.
Okay.
And look, it wasn't making huge returns or anything like that, but it was positive and it was somewhat consistent. And, that's where I thought, okay, I'm onto something here. This is actually working.
Did that change your emotions at all, seeing that trickle up? Because so much of trading, and I've read some of your work that I agree with, is trading is as much 90% emotional and 10% technical. Did that sort of have an effect on your emotional side, actually making money, which is counterintuitive, because sometimes we feel, like okay, I lost money, I'm sad, I'm happy, I made money, and I'm glad, but that's actually counterintuitive way to think about it.
Yeah, it's actually a really pertinent question because it affects you in ways that you wouldn't anticipate. Um, when I was non-systematic, my emotions were all over the place because my results were erratic. My fears and hopes and dreams and greed and all of that got in the way.
Yes.
So I was very unstable emotionally when I was trading with a discretionary approach. When I went systematic, that calmed it all the way down, which was great because all of a sudden I'm just following the rules, buy, sell, based on the system. So in that sense, my mind calmed a lot. But a couple of weird things happened. The first one was when I was running the system, every now and then I would get a signal and I'd go, ugh, I don't want to take that trade. Ooh, I don't want to hold that stock. Or,
Old
really, I don't think I
habits,
should
old
do
habits
anything right.
creeping in. Yeah.
Yeah. So, but this just because you're systematic doesn't mean those emotions don't come up.
They're still human.
Yeah, still human. You're not a robot.
Yeah.
And so, but the great thing about systematic trading is you can take those emotions and channel them into testing. So if
Okay.
I saw a stock and went, ooh, I don't want to trade that stock, I can then go, oh, hang on a minute. Why? Oh, look, it's really gappy or it's really volatile, or the last time I bought it, I had a loss, or whatever the reason was. Then you can take those and you can those observations and you can codify them and then test them to see if they're actually value adding or value destroying.
Yeah.
So for example, you see a stock, it's really gappy, it's jumping all over the place. Create a rule that filters out stocks like that, add it to your system, see if it makes the system better or worse. So you can take the emotion, actually use it,
Yeah.
which is really powerful. And most of the time, what you find is the emotion doesn't add value. So you can just ignore it and implement the system as is. Sometimes you find a rule that really does help, improves the system, so you can add it to the system and it gets more profitable from then on.
So does
So it's really good like
yeah,
that.
yeah. So does every person, in your opinion, need to develop their own system, or is there a baseline that you can go on and then build on from there? Or how would you advocate for that?
Yeah, I used to take the hardline approach that everyone should have their own system because everyone's individual, they've all got their own objectives and so on. The challenge is that developing your own system is actually not easy. It's as far as the spectrum of skills go, it's way up at the advanced end. So now my approach when I'm working with new traders who want to learn
Yes.
is I give them systems and then I show them how to test and evaluate those systems for themselves. So you don't have to start from scratch and try and figure out what works. Here's something that works. Now build confidence in it by testing.
Yes.
So I've had a lot of success with that. So I would say, no, you don't have to build your own system. But yes, you do have to build absolute confidence in the system you do trade, whether it's yours or someone else's.
Yeah, and a bit of an advanced question on for newbies on systems. I mean, you've tweaked. I've imagined you've tweaked your system over the years, and that's where I see someone that start to trade. They're always looking for sort of the holy grail of indicators, or I call just like tweaking the whole time. Sort of. Have you noticed the same, that like people always want to jig basically with the system, or they want to add something or take it away, or it's not about the perfect system, but it's this fallacy of the thing that works 100% of the time.
Yes. It's a pretty common instinct, and I have it as well, to want to tinker with things, muck around with it, change things, try and make it better, try and tweak it.
Yeah.
I've got a philosophy which is, you could basically boil it down to test fast and implement slow. So if I have an idea, I'll test it. But I don't go and just change things on a whim. My sort of change cycle of implementing new ideas into a system is quite slow.
Okay.
And that's because I want to be very considered about it. I don't want to be jumping from one version to another all the time.
Yes.
Because that creates instability, inconsistency in the results.
Mm.
But the other thing, which is probably even more important, is most people will tinker with their one system to try and make it the perfect system. But one system will never be perfect, right?
No,
so
can't.
the magic is actually not having one perfect system. The magic is having a whole portfolio of good systems, lots of different systems that do different things.
Yeah.
And combining them together. That way, you don't have to worry about making one perfect because you've got a whole bunch of systems. None of them are perfect. They're all good, but they combine together to give you really great results. This is what the quant hedge fund managers do, and that's how they manage to get smooth, consistent returns over time. We can do that too as private traders.
So what types of emotions do you see coming out the most? People coming to you and say, Adrian, I want to start this. And I don't want to call it investing, or I don't want to call it trading, because they've got their own stigma. I call it people who want to participate in the financial market, in the financial markets, but they don't want to use a fiduciary or a broker or one of these big BlackRock or whatever. They want to try and do it themselves, right? So what are the main sort of emotions that they portray that you sort of need to deal with first before you can start?
The first and most common one is greed. People think, oh, I'm going to invest or trade. I'm going to get rich. It's going to be easy. I'm a smart person. Actually, greed and ego, right? With the ego getting in the way.
Yeah.
Because so many people come to the markets thinking it's easy and they're smart and they'll just do a couple of things and their account will grow and they'll be rich. The reality is quite different. It's a tough competition. Right? It is a competition that you've got to beat people in order to make money and grow your wealth.
Yeah.
And so the first thing is getting over that ego and that greed and realizing that you're a beginner.
Yeah.
And that's okay. And you've got to be comfortable with going slowly, learning first and implementing and not being too aggressive. Greed also comes out so much because people are trying to rush it. People use high leverage, they use big position sizes, they trade very frequently because they're trying to get rich quick. But getting rich quick inevitably leads to getting broke quick. It's almost I would say a one-for-one correlation between the people who are trying to get rich quick. They always end up blowing their account. So if you want to be consistent, you've got to give up that greed and be humble and generate, learn first, right? Realize you're a student and you've got to master it so that you can win this game. So that would be probably the biggest thing that people start at the beginning of.
For me, one of the benefits, even if you don't trade or invest or anything, it's financial literacy, learning how the markets work, to be able to ask your portfolio manager or your fund manager or whoever, like, why are you doing this? Like, why are you doing that? We've been so conditioned to not ask questions about why is my portfolio underperforming, and then you get some blah 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 stupid nonsense answer and you just sort of accept it. But if you got that financial literacy, even if you don't invest or trade yourself, you can take ownership of, oh, okay, this guy, I'm getting screwed here.
Yeah. I think when you give your money over to someone else to manage, I feel like one of the most important things to understand is, what is their incentive? What are they measured by? Because incentives really matter. What is a fund manager, like a typical mutual fund? What are they? What is their driver, their incentive? It's to hold on to your assets to collect fees.
Yeah.
If they underperform too much relative to their benchmark, you'll take your money out and they will lose their income. If they
overperform,
if they overperform, then you're going to expect them to keep overperforming. And when they perform back at the regular, expected level, you're going to go, oh, you've lost it. I'm going to take my money out.
Yeah.
Yeah, it's kind of a weird psychology here. So fund managers, they just want to hold on to your money, so they just track their benchmark as close as they possibly can. They don't want to, they don't underperform. I mean, they'd love to overperform consistently, but they can't
Yes.
because they
Yes.
have costs.
Yes.
If
That's
you give
really
it to,
interesting.
yeah, if you give your money to a trader, like someone who's going to actively manage it, then first of all, be very, very careful because you got to go with someone who's actually licensed and make sure they're not a scammer and all that. But assuming you find someone who's legit, their incentive would be determined by how you pay them. So you want to understand the incentives, and as a trader or investor, you want to understand your own objectives. What do I really want to achieve out of this? How often do I want to trade? How much activity do I want? How long do I want my hold period to be? What sort of returns do I want? What drawdown tolerance do I have? What am I comfortable with? If you understand all of those things, then you can start to make some really sensible decisions about, do you give your money to someone else or do you manage it yourself? And if you manage it yourself, how do you do that? What sort of rules do you need? What sort of approach?
That is such fantastic advice and a brilliant clip. I'm going to clip it there. That's a clip for the podcast and a brilliant way to end the show as well. Adrian, thank you so much for joining me today. If the listeners want to go and connect with you and find out more about Enlightened Stock Trading and where they can go on this journey with you if they choose so, where can they do that?
If they go to enlightenedstocktrading.com/free, enter your name and email there, and you'll get a whole bunch of training, a couple of training courses, a couple of ebooks, an example trading system so you can really understand what am I talking about here. And it's a system that works. It's one that I use. So that's the best place, enlightenedstocktrading.com/free. Otherwise, look at the website. I'm on social media, but I think the best place is the website because that's where all the material is.
Okay, and we'll put all the links in the comments. Thank you so much for joining me today. And to all listeners, peace, love, and prosperity. And we'll catch you in the next one. Cheers.
Run dry. I walk these empty streets with a song in my mind, a guitar in my hands, a dream in my soul, singing for love, for the ones I hold. Oh, the world feels cold tonight, but I'll keep walking towards the light. Shadows whisper, calling my name, but I know love will ease the pain. Like the wind, I'll chase your name, through the storm, through the rain. If the world falls apart today, I'll still be here, I'll still remain. The embers of your touch still linger on my skin. Every step I take, I feel you deep within. No one compares, no one can take your place. You're the light in my darkest days. Oh, the silence cuts so deep. Memories I swore to keep. Ooh, the wind still whispers your song, telling me where I belong. Like the wind, I'll chase your name, through the storm, through the rain. If the world falls apart today, I'll still be here, I'll still remain. If you need me, just call my name, through the echo, through the pain. No distance can keep us apart. You're the fire in my heart. Through the burning sky where the rivers run dry, I walk these empty streets still singing your lullaby.